The Philippine benchmark index deepens its losses. It closed at 16,940 after shedding 0.5%. Value turnover was at 3.76 billion pesos. Sandra Araullo, the Chief Investment Officer at ATR Asset Management, now joins us on the show for her take on the markets. Good afternoon, Sandra. Welcome to the Business Roadshow.
Good afternoon. Good afternoon, Stanley.
All right. Lower share prices and foreign fund outflows defining last week's trade, or what some analysts would call a Trump trade. But is the downtrend really largely because of the U.S. political developments, or are there other threats that may have been obscured, by the recent Trump win that's also affecting Philippine equities?
Yeah, we got third quarter GDP numbers last week, and the headline had exacerbated the rout. It showed that the GDP had slowed to 5.2%, so we're well below what was expected. The number from the second quarter was 6.4%. Our expectations were closer to 5.7, and consensus was, consensus 5.7, we were expecting 5.8. So definitely, from a headline standpoint, it didn't help. But as we look under the hood, we recognize that despite the export-driven slowdown, the consumption and investment-related components or household spending were quite resilient. So that's offering us a glimpse of hope on that front.
Okay, now Sandra, we're lacking catalysts between now and December, really, and the succeeding BSP rate cuts not happening until December. The problem with another uneventful week now, or uneventful 2 weeks that is that share prices in the Philippines may further dip, or at least hover within this range. Is there anything positive now in the horizon that may rub off on our markets?
We do have, another thing that had weighed on the market is the strength of the dollar.
Yeah.
And the narrative around possible reflation and what the known unknowns are in the coming leadership of Mr. Trump. So with the seasonality, we know that OFW remittances are poised to prop up the peso.
Yeah.
So that might offer some support for the market. We are also at some technical support levels. The drawdown has been quite dramatic, almost a 50% retracement from the peak prior to the election event. So we hit close to about 7,554 for the PSEI.
Right.
The valuations there were at 12.14 times price to earnings, and today, as we close, we're closer to 11.15. So that's already a big move in itself, and for us as professional managers, we are actually taking advantage of this drawdown to deploy towards those stocks that we like.
Yes, of course, when you have market levels at 16,900, really talking about, good opportunities to buy, or maybe even bargain hunt, if you will. But the question is, are there stocks that that are at bargain hunting levels as we speak?
In the very, very short term, banks were we're seeing price to book prices closer to very low valuations. But it's been, the sector itself has done well this year. From a sector standpoint, consumer and property had been quite unloved. Ali, we think, has been mispriced for quite some time now. Okay. We do still look to inflation coming down, and consumption being still resilient, as shown by 3Q GDP numbers. And so going into next year, we do think that as inflation comes further down, those sectors, banking and property and consumer discretionary, may play catch up, and the valuations for names such as Ali and JFC are really attractive for us at this point.
Okay, and just one last question, Sandra. We're talking about a Santa Claus rally. Is there one, or did Santa already come early? I mean, last month was at the peak.
You know, it's a very, very short time horizon, and it's really hard to tell.
Right.
What I do know is that there are several scenarios that we're mapping out for next year and considering the results. And so from it's quite linked to what might happen, obviously, in the US. And so for our own markets, if the peso averts some of its recent weakness, if the BSP kind of maybe not necessarily reverse in its easing course, but maybe pause, these might figure into market dynamics. So we're also closely watching correlations between yields and risk assets. And so the likelihood of a Santa Claus rally, well, it's always there, but maybe probability of it is lower than usual.
And is this a risk-on market still?
Yes, we think so. It's just that there are several paths, no? So we call it path dependency. And in the US, maybe the best case scenario, or our base case scenario, in fact, is it's still a strong economy for the US. There is some positive sentiment on risk assets. Rates don't go high and persist. Don't go high and quickly and persist. And that might give markets such as ours, no, emerging markets, some opportunity to get some reallocation of funds.
All right. Thank you so much again for those inputs, Sandra Araullo of ATR Asset Management. Have a pleasant afternoon.
Thank you. Always a pleasure.